Ladies and gentlemen, welcome to the weekly game plan. We're going to be breaking down the markets. They're super volatile right now. We're going to be breaking down some trade ideas, and then we're going to get right into Q&A. So we've got DeepSeek to navigate. We've got tariffs to navigate. We've got earnings. There's a lot going on in the stock market, and I'm here to help you guys navigate it. So I'm just going to move Discord over here, and we'll get right into it. So S&P 500 gapping down right now. This is the futures contract /ES. Of course, we can take a look at SPY and chart that out, but ES is going to have a little bit more data because we're gapping down. We have recovered just a little bit off the lows, but I don't know how far that's going to go, as in, I don't know how far it's going to bounce or if it's going to sell off. But as of right now, the market's set to gap down by about 1.64%. If you guys recall last week on SPY, I was noting that we're at all-time highs, but we're a little bit extended. And then we get the DeepSeek news. They sold it off in the futures market. It was thin liquidity, meaning there wasn't a lot of orders going on. So the price was able to move down very fast, very quickly. I noted that 595, this kind of little cluster over here, could be a potential dip buy, and that was a good dip buy zone. The S&P rallied from 595 all the way back up to pretty much 610. On Friday, though, we had a bearish engulfing candle. And if you take a look at the 5-minute time frame, if you guys were trading with me live, I was noting that I'm expecting kind of like a bullish morning, but then a bearish afternoon, because we're extended into a supply zone. I actually don't have it drawn on my chart. But basically, you know, whenever you see like a big sell-off from an area, if you come up into that area, it's going to be an area of supply. Especially if it's extended, it's more likely to potentially drop than it is go higher. Now, I wasn't expecting a sell-off like that. That's where news catalysts can come on in. So SPY, I was noting over the weekend, it's probably good to be in cash, just because cash, or if you want to, you can balance out your deltas by shorting. You can go take bearish S&P trades. You can buy SPXS. You can sell call credit spreads on SPY. You can buy puts on SPY. Whatever you want to do, but the market is at a really interesting spot. If we take a look at VIX, our volatility and fear index, I was noting that VIX puts are pretty cheap down in this kind of region. And as you can see, VIX on Monday was up quite a bit from Friday all the way up to Monday, up 52%. Then it sold off yet again, as VIX tends to do. VIX tends to mean revert. The volatility usually doesn't last too long. In some cases, though, the volatility can expand, and then it can expand again. And that's where you see those Six Sigma moves, where it's very rare that that happens. But when it does happen, that's where a lot of money can be made on the short side. A lot of money can be made betting against the overall stock market. So VIX is probably going to gap up, maybe 10, 20%. If VIX is holding above 20, that's where option premiums are really expensive, both on the call and the put side, but more so the put side. And so if you can identify where there may be areas of support, that's where you can sell bullish put credit spreads. So SPY, if it gets down to 584, 582 this week, that could be an area to sell bullish put credit spreads, expecting it to stay above maybe especially something like 560, okay? 560 to 565. I think that the market, it probably doesn't crash much underneath 560. I don't think it's going to make all-time highs for at least a couple months, especially based off this chart pattern. I'm more than willing to update my analysis on that. But as of right now, 2025 is kind of looking like a big range-bound market. And if you're just coming on in, welcome, welcome, welcome. Good to see you guys. I hope you all had an amazing weekend, okay? And so in scenarios like this, cash is okay to have as a position. If you're sitting in cash, you can monitor the DXY, the dollar, and the dollar is screaming upward right now. And so, you can actually trade the dollar. I like to trade UUP, calls and puts. It's okay. It's not the best trading vehicle, but it gets the job done if you can catch a good limit order and just go smaller size, since the bid-ask spreads are decently wide. So UUP is a potential idea for now. No clear concrete trade setup on that, but DXY dollar is breaking out. I'm going to go over some trade ideas in this video, but I'm first going to recap some of the earnings that happened last week and what we can learn from it. So first up, I talked about the TSLL put ratio. This is a double levered long on Tesla. I like trading TSLL because it's pretty liquid. You know, right now the bid-ask spreads are showing it trading pretty wide, but I think it's a better way to trade Tesla than just Tesla outright. And we got paid. It wasn't a lot. You know, if Tesla would have if Tesla would have sold off, we would have gotten paid a good bonus, almost a 10% bonus, if Tesla would have sold off right in this kind of green zone. But it just, you know, it was down after the earnings report. It was a trash earnings report, but Elon Musk pumped the stock up. And it may be a bad earnings report short term, but maybe longer term it can, you know, fulfill all the promises that Elon Musk has with the Optimus robot, autonomous driving, you name it. But just keep an eye on just the lower highs that are being made on Tesla. We can take a look at the base stock, the common stock Tesla. And, you know, you kind of got these lower highs going. You got this flat bottom. Tesla looks like a short underneath like 385 and maybe see if it can test like 363. But I'm not gonna mess with it in this chop zone over here. You know, maybe you could trade the range until it breaks, but I'm not a big fan of that for right now. Sometimes there's a time and place to trade the range. For now, I think there's too much energy built in Tesla, and it certainly could explode higher, but it could also drop pretty quickly as well, as there's a lot of gamma risk built up, meaning there's a lot of calls being bought, a lot of puts being bought. If one side breaks, the opposite side of that trade has to give up. And, you know, if we got tariff news, and if Tesla is going to be tariffed heavily, that's going to affect the business model. So Tesla, a nice good TSLO put ratio win. We talked about that on the YouTube video publicly for free, and it was alerted in victory trades. Next up was Meta. I noted that Meta was looking bullish. It probably doesn't stay much above 700 as per the expected move. Overshoots 700 by a little bit, it comes back in. That's completely normal. 2/3 of the time, 68% of the time, options or the stock price will stay inside the expected move. So Meta was likely going to stay above 600 this week, and it was likely going to stay underneath 700 this week, and that proved to be the case. But the bullish call debit spread ended up paying out. So that was a cool little trade. Microsoft was the only earnings that I did not profit on this year in 2025. I'm 4 for 5 on trading earnings. I was telling you guys that I believe that there is an edge to trading earnings if you can crack the code, and that's using option chain expected move, technical analysis, fundamental analysis, plus AI. And that can just give you a slight edge. I think it's a little bit better than just playing blackjack. But if we take a look at Microsoft, I was saying, bullish weighted iron condor. Microsoft just had a bearish reaction. Moving forward on Microsoft, we do kind of have this kind of like bearish setup. Microsoft probably sells early in the week, especially since the market's gapping down right now. But if Microsoft maybe sells off to like 400, I might be considering selling like a bullish put credit spread. And I actually have this order up. I have a limit order set at 3.6 credit. Sell the 380 put, buy the 370 put, June 20th, 2025. Basically, that's just me saying, by June 20th, I think Microsoft closes above 380. And that's a strong support area. If Microsoft got oversold into that level, it probably bounces at some point. The fair value on Microsoft, you guys, is $490 per share. And so that would take Microsoft back above all-time highs plus more. So I think I'm going to let Microsoft sell off, and then I'm going to start to build a position down here. And I'll accept the risk. You know, if we close like a week or two, maybe a month underneath 380, I'll just say, yep, I was wrong. The market's probably crashing at that point in time, and I'll accept the risk. But odds favor that Microsoft stays above 380 for the duration of 2025. I also don't think that Microsoft is going to be affected all that much by the tariffs. They certainly will have an impact, but I think it'll be one of the stocks that gets impacted the least by a potential trade war. Okay, so that's Microsoft. Apple, talked about the bullish weighted iron condor. That paid out perfectly. Got $190 profit on the Apple bullish weighted iron condor. And why? Apple was above support, but beneath resistance. Apple usually doesn't move too much on its earnings report. And so Apple, if we take a look at this, it stayed above support, stayed beneath resistance. I sold the 250 bear call credit spread, and I sold the 230-250 bullish put credit spread. I basically was risking about $310 to only make 190, but there was a much higher probability that I'd make the 190, and that ended up working out well. Iron condors are great because remember, you just don't want it to go up and then stay up, or go down and then stay down, because it can go up a lot and then come back in. It can go down a lot, and if mean reversion takes place, it'll come back into your profit zone. Okay, so Apple, moving forward on Apple, I'd kind of be neutral / bearish. It's tough for me to say. There's a lot of moving parts right now. We also have Google earnings. We got Amazon earnings. We got Snapchat earnings, but that's not a big player. Last week we talked about Intel and how Intel is looking bearish. Intel did sell off. I just took profits on the puts ahead of the earnings report, and that paid off well. So Intel bearish worked out. XOM. Talked about XOM, how that was more likely to be bearish than bullish. That put debit spread ended up paying out 100%. And then last week on the free trade ideas, I had talked about MSTZ cash secured put. So MSTZ, I sold the 14 strike cash secured put. I alerted it. I said you're going to get an 18% guaranteed return. That trade is already up, and I'm just going to hold this to expiration. I do have to hold through MSTR earnings, which totally could pump the stock. It could dump the stock. But MSTR, I'd be more bearish than bullish. I'd probably be looking at shorts near resistance or shorts at a breakdown on MSTR. The expected move this week is about $37, and they do report earnings on February 5th. I do think that expected move is pretty low because, MSTR can move like $30 within a day. Here's a day where it goes from 387 up to 446 on a single day. Here's a day where it goes from 543 all the way down to 374. That's a parabolic sell-off. Watch out for trades like that. Those are tough to catch, but if you see a parabolic stock and you see it zip up, maybe it's gapping up, pumping up, and then it starts to break underneath the low of the day, that's called like a reversal type of setup. It's like a hump formation, move 11 formation, whatever you want to call it. And that's a short setup. You short, put your stop loss above the highs, and then money on the way down. It kind of reminds me of SMCI. There was a trade last year where we turned $100 into $4,000 on SMCI, and it was basically, it's tough to see the day that it was, but it was the dead all-time high of SMCI, and that was before the split. And you can just see SMCI since then down 80%. Should have went with leap puts, but that's besides the case. Yeah, MSTR is crazy volatility. We will be breaking down Bitcoin. We will be talking about Palantir and some other trade ideas. Yep. So on that note of MSTZ, if we take a look at Bitcoin /BTC, it is gapping down 4.75%. Ethereum's gapping down 14%. It is finding a little bit of support, but it did just break this structure bearish. That's a kicking bearish reversal pattern. If we take a look at Bitcoin, still really just range bound. There's no big sell-off likely until 92,237. If that breaks and turns into resistance, you could see Bitcoin probably sell off to like 72K. Bitcoin's pretty volatile, and you just want to watch out. A break above Friday's high could signal a breakout to all-time highs and further on Bitcoin. But for now, my rating is neutral / bearish on Bitcoin. And that's why I like that MSTZ long. MSTZ. You can, even if you wanted to, you could, if you want to be more aggressive, you could buy 100 shares and then do something like sell the 22 covered call. You get paid a guaranteed $130 to agree to sell your shares at 22. It's at 1750. It's probably going to be gapping up as well. This is the inverse. And you get a 26% profit on the shares plus an additional $1.30. So you'd get like an additional 6%. So you'd get like close to, I'm just approximating, a 34% gain on your shares. If you long 100 shares and sell that covered call, you do have to hold through earnings though. So it's not ideal. Okay. So MSTZ goes up when MSTR goes down. I would just prefer to trade MSTZ as the liquidity is pretty good, and MSTR, the bid-ask spreads are a little bit wide. Like, look at this. And the option premiums are expensive as hell relative to most stocks. Okay? Lots of implied volatility, 122%, just meaning it's expecting some wide ranges. Okay? Last week, we talked about how NVIDIA was a little bit more bearish than bullish due to the bearish engulfing. Of course, you get the DeepSeek sell-off over there. Now we're kind of basing. We got higher lows. We got kind of lower highs. If NVIDIA really starts coming underneath Friday's low, which it looks like it will, and then underneath like 116, NVIDIA can probably sell down to 100. It won't do it in one fell swoop. It could, but it's not likely. But 100 would be a good price target. I like NVIDIA buys from 80 to 90. So after this bearish engulfing day on NVIDIA, I downgraded NVIDIA from a buy to just a hold. So I stand by that. NVIDIA is a hold longer term, but I'd wait for some better deals before buying. And if I happen to miss the low, so be it. I'm totally cool with that. But I just want to wait for some new setups on NVIDIA. So that brings me into the SMH, the semiconductor ETF, really just all over the place. Like, just false breakout to the upside, false breakdown. Comes back to the midpoint of the range, finds some resistance. I'd only be interested in SMH really if it comes down to like 222. I do like it long term, but it might have some headwinds in 2025. Okay, and that would spell a little bit more bearishness for the market as of right now. Okay, so now let's get into some trade ideas, and then I'm going to break down your guys' stocks. Okay, so if I missed your stock, just repost it. Okay, so let's talk about this first one, GTLB. GTLB, just starting to break out of these highs. This has some relative strength. GTLB, long over 73.50. And a stop on that trade, super simple, underneath 68.39. You could go with a tighter stop, but a tighter stop has a higher probability of stopping out, but your risk to reward is better. So you got to risk 6.5%. Maybe you can get 6.5%. So 1-to-1 risk to reward, but more likely to break out if the market's strong. If the market's weak, this is just going to sell off and dump with all the other stocks. There is minor support at 69.50 as well, which is the gap from Thursday into Friday. We talked about IWM just a little bit. IWM just kind of holding up in this range. Again, we can take a look at RTY futures /RTY. I think this is going to be a great week for futures trading as the volatility is expanding. So when VIX expands, you want to reduce your size and you want a wide stop and wide take profit. Okay, that's the way to trade when volatility is expanding. If you're a good scalper, this is your chance, because on like the 1 minute and the 5 minute, there can be some good moves to be made, but you want to be careful for some of those liquidity sweeps. Like even on the 5 minute, barely break the high, zip back in. Barely break the low, zip back up. Obviously, this is the overnight session, so that's, it's more prone for liquidity sweeps like that on the overnight session. But, the Russell has been underperforming for a while. Maybe the Russell can sell off a little bit more than SPY and QQQ, but I've got to be mindful of those types of rotations. We can take a look at the RSP, the equal weight. This hasn't been doing too bad as of recent. It's been underperforming for a while, especially look at this sell-off. That's a nasty, nasty sell-off. And the RSP is just the equal weight S&P 500. So instead of NVIDIA, Apple, Amazon taking up all the weight, they equally weight all of the stocks in the S&P 500. So that's the RSP. You can trade the RSP if you ever want to. The bid-ask spreads are not as good, though, as it would be with SPY or SPX. Okay? Last week we talked about Google. Look for the breakout long over 200. Google, new all-time high, new closing all-time high. This is going to probably sell off with the market, and it does have earnings on February 4th. I don't have a strong opinion what earnings are going to do. I'm just going to hold my longer dated call debit spreads on Google, and if they're down, so be it. There is support on Google at around 195. So if it sells to 195, I might add to that position. Okay, so that's Google. Next up is oil. Oil longs are looking good. So if you're looking for a moderately uncorrelated asset class, Oil longs look all right. It is gapping up already, 1.85% in the futures market. But oil, different ways that you can get involved with oil. I like wheeling UCO. And what does that mean? Sell cash secured puts if you get assigned, sell covered calls at your entry or above. So this week, I like the UCO 28 strike cash secured put. Maybe since oil's gapping up, maybe I'd sell the 29 strike cash secured put. And I'd get guaranteed cash to agree to buy 100 shares. The only drawback to the wheel is really it's suitable for medium-sized to larger-sized accounts. If you've only got a $2,000 trading account, I would just focus on building up your trading account, get another job, get a raise at your job, and invest more into your trading account and just focus on investing. You can get aggressive with it, but generally if you try to take on too much risk, you're just going to dwindle away that account. But what's really nice about the wheel is it's still pretty stable for your account. Like oil's not going to go to zero. And so your account won't go to zero if you sell the cash secured puts. And by the way, none of this is financial advice. This is all for educational purposes only. I'm just drawing on a chart. I don't know you, your financial situation, your risk tolerance, your total needs when it comes to your portfolio, whether it's income, growth, preservation. Everybody's completely different. So I'm just kind of speaking from my perspective, and I'm going to show you guys what I'm doing and what I see on the charts objectively. But adjust as needed for your for your account, because it's important to understand that. When it comes to oil, it's moderately uncorrelated with the SPY. So oil can go up or down while SPY can go up or down. It doesn't mean that if SPY goes up, oil goes up, SPY goes down, oil goes down. That would be positive correlation. Oil's correlation coefficient, I'd have to double check this, but I think it's 0.3, but it's pretty much close to zero. So it's nice to trade other markets like oil, gold, natural gas, bonds, and then S&P, and then there's real estate, and then there's other assets that you can't put a price on, like your network. People are assets, you guys. Don't forget that. Okay? So oil long looks good. In terms of risk on oil, I wouldn't want UCO coming underneath 26. I wouldn't want CL, the crude oil futures. Really, I don't want it coming underneath $70 a barrel. That would tell me that my thesis for the oil long would be wrong. But, I'd be neutral / bullish on oil. If you want to be more aggressive and think oil is going to spike, you could go with USO calls. Okay, USO calls. I do have a weekly call option that's going to be going in the money. And I do have a longer dated call debit spread. But USO, what I'd look at is maybe like a July call option, maybe a call debit spread, maybe some bullish put credit spreads. The option premiums are decently high, so just buying a straight up call carries more risk and less reward sometimes if you think that the expected move is too high. And it may or may not be, but if you just sell bullish put credit spreads and then oil flies up, you just make the max profit. You don't even have to do anything. You just enter the trade, oil goes up, okay, money. Okay? So that's oil. I like it for longs. In terms of other sectors, XLE might get a little bit of a bounce. It is coming oversold. I said that the first quarter of 2025 is likely bullish for XLE. And since then, XLE went up 10%, but it retraced now 7%. That's a bit deep of a retracement. So XLE still might sell early in the week, but I think it probably finds some support. It probably stays within the range of like 90, but above 86. So that's for XLE this week. Another one is SPX, SPY. So again, if my range bound thesis is generally correct, and I think that, S&P doesn't really sell too much beneath like 57.35, but it stays underneath the all-time high, that could be a potential iron condor opportunity, maybe like 45 days out, 60 days out. Basically, the way that this looks on the chart is I make plus money if it stays within the range. I lose if it breaks the all-time highs and holds above there. I lose if it sells off and the market's crashing. Okay? So that would be the iron condor trade idea for SPX. Another one is FXI. So FXI last week was good for call options. FXI getting a nice good bump up. Ran up about 3%. If FXI could maybe come back maybe to something like 30.8, that could be a potential dip buy zone. It's going to be this zone over here, 30.8 down to 30.6. Last week, Baba calls paid. I did take a loss on PDD. I bought PDD at like 114, cut it immediately on Friday at about 113. So a tiny little paper cut on PDD, but Baba did well. FXI calls did well. And so I'm just waiting for a reload on that. We also talked about the Microsoft bullish put credit spreads. Again, you can see this order right here, 380 by 370. Basically, let's say I get filled at 4.0. I'm probably not, but I'm going to be risking $600. So $600 is my max risk. That's also the cost of the trade. So you only need $600 in your trading account, but I'd make plus $400 if Microsoft can stay above 380 by June 20th. It can even sell off as long as it stays above it by the expiration date. I'm good. It can go sideways, which would make me money because I'm positive theta. That's what happens when you sell options or you sell a credit spread or sell an iron condor. And obviously, if Microsoft rallies or goes up, I'll just make the max profit faster and faster. And so that would be a positive scenario. Okay? So Microsoft, I like the bullish put credit spread. NVIDIA, we talked about NVIDIA puts. That's a bit aggressive, maybe for like a day trade or a quick trade, scalp it underneath those lows. Sometimes the market really does not like rewarding short sellers, though. Like, you need to get a really good entry. And most of the time, shorts don't pay. But when you do get them right, they pay a lot. Okay? Another one that's kind of on the radar that could be affected by tariffs are General Motors. So automotive companies might get affected by the tariffs. I'm not married to this idea. This kind of looks messy. Kind of got higher highs and lower lows. That's a broadening formation. Those are tricky to trade. But maybe if I want like a hedge, maybe I'd buy puts on GM. Something to consider. Okay. And of course, we got the Grammys tonight. And Bryce is telling me, I think that Taylor Swift is going to get some sort of a Grammy. So you can actually bet on Kelce. By the way, I'm really good at event contracts. Only one loss last year on event contracts. And got the Chiefs winning right. Got United States or global math scores correct. They're unchanged. We predicted that Trump was going to win the presidency. That paid out 100%. But if Taylor Swift wins any sort of Grammy, $10 turns into $34. That'd be a $14 gain. But also, Bryce is a big Swiftie fan. She thinks that Taylor Swift is going to win 3 Grammys. Look at the risk profile on this. I'm literally only risking $9.98. We'll call it $10. But $10 can turn into $156, That's a $156. That's a 15x trade. I like the risk to reward on that. I'm happy to lose the $10 if she doesn't. She likely won't win 3 Grammys, but if she does, hey, that's pretty cool. And so my total risk on that is really not a lot. Okay? So those are the main trade ideas, minus the non-stock related trade ideas. What kinds of questions do you guys have? What kind of stocks do you guys want analyzed? I'll also be posting more trade ideas as I do some more research tonight. But yeah, what you guys got for me? Welcome. All right, let's check out Palantir. Palantir is bearish over here at 81. Then I became more bullish above 71.50. I actually haven't drawn on this chart in a while, and it's played out to a T. It's going to be tough, though, with earnings on February 3rd. I know that a lot of analysts upgraded this after it rallied. So it's like, okay, come on, analysts. Why don't you upgrade the stock before it rallies? But Palantir, I don't have too much of an opinion on. I'd say let's just check on it after the earnings report. Maybe there are some day trades in it. But yeah, that's Palantir. If we check the expected move for Palantir, the expected move is plus or minus $11. So Palantir, it's at 82. It's not really expected to go above 93 or close above 93, but it's really not expected to go much lower than 71. So 71 is a support area. So 68% of the time, Palantir is going to stay within this range. It's a pretty wide range if you take a look at it. Unless I just scrunch the chart down, then it doesn't look that wide, right? So, yeah. And yeah, other altcoins are going to sell off harder than the rest of cryptos, because if Bitcoin's selling off, it's kind of like the S&P 500 of crypto land. And so if Bitcoin's rallying and doing well, altcoins are probably going to do even better. If Bitcoin's selling off like this, there's no reason to be in highly risky assets like altcoins. And Bitcoin is also a leading indicator for the stock market. This is signaling risk off. So cash, short positions, maybe sell covered calls closer to the money if you've got baskets of 100 shares of stock. So that's something to consider. All right, let's check out ONON. ONON, this is a nice winning trade. I'm all out of ONON, but basically going long at about 58.29, took profits at 60.14. It did go as high as 64, but I'm glad I didn't overstay my welcome. ONON probably goes sideways to slightly lower, but then finds some support. I think the stock closes above 58 by the end of the month. So that's ONON. WRBY, this is another win. Yeah, Warby Parker. This is a nice flag break. I noted the 30 strike call options. Bought them at 30 cents, sold them at 60 cents. They made a high of 80 cents. That is a dark cloud cover formation. So again, this looks like that might go sideways to slightly lower, but there is support at 27.13 on WRBY. If we check out UNG, if you've got a position in UNG, you're doing well. UNG is gapping up 8.8% right now. So if we take a look at UNG, the chart, this is the ETF that tracks the price of natural gas. Also another great thing to wheel and trade if you want an alternative asset class to SPY. So that's really, really nice. So UNG going to be gapping up 8.8%. That's going to be putting UNG at about 1750 on Monday. It's currently at 1619. So that's a really, really big gain. I would say that it probably holds underneath like 1850, but probably stays above like 17. Probably stays in that range. Again, that's just more speculation for now. I'll have to see how the chart opens up and trades on Monday. Walmart. Now this gets interesting with consumer staples. Walmart's a big proponent in consumer staples. Consumer staples catching a little bit of a bid the past few weeks, but we're kind of just trapped in this range. Consumer staples may get hit from tariff news, but I wonder if they can overcome that with pricing power in the future. You know, just pass on the cost to the consumer, maybe a little bit more to put some profit in their books. The problem is with that is that going to crush demand? Because, you know, if groceries are so much more expensive, maybe we all just go on a diet, right? Maybe we burn some fat. Something to consider. But XLP is kind of confirming if it breaks above 80. If we go back to Walmart, Walmart's pretty extended. Congratulations if you've been in this name for a while. I haven't traded too much Walmart, but it's been a good stock. You can see this powerful uptrend. I'd say a dip buy on Walmart could be 96, and that's this kind of, you know, balance area high, top. If it comes into that top from the bottom side or from the top side, that could be a little support. So let it sell for a bit, and maybe you could sell bullish put credit spreads at 96, or if it's confirming it right then and there, maybe you could grab some shorter dated call options, look for a small bounce. Maybe not a bounce straight up to all-time high, but a dead cat bounce. And just because I say dead cat bounce, that doesn't mean that it has to drop or break that support, although that would be a short setup if that took place, if it bounces and then breaks that critical support. So Walmart, I'd say let it sell, be patient, then maybe a dip buy, at least for a short-term bounce. That's the only setup I see. Maybe if you wanted to, you could short it, but I don't want to short Walmart. It's a beast. There are way better stocks to short. than Walmart. All right. What else do we got here? Those are my thoughts on those stocks. Let's check out WLTG. WLTG. Thinly traded Wealth Trust DBS long-term growth ETF. Okay. So this is more of like an investing type of thing. No options on it. It's been performing well. Looks good to me, I'd say. And again, none of this is financial advice. This could just come crash into zero, but that's the least likely scenario. Odds favor that if it pulls back to, 27, that could be a good strong support for the longer term. I think this is just a good dollar cost average candidate. Buy 3 shares a week, put in $100 a week. Buy 10 shares a week, buy 1 share a week. Do whatever you can. Everybody can do $30. If you had a gun to your head and had to put $30 into a stock every week, you'd find a way. You'd find a way. When is the current sale at Apex finish? I believe it has a couple more days left. Apex is a good way to trade futures. It does take a lot of work up front, and success is definitely not guaranteed, and the probability of success is really tough, but that's for everything when it comes to day trading and futures. But yeah, I think if you're going to trade futures, grab an account or two with Apex. If you like it and you're doing well with it, grab more accounts. But I think it has a couple days left. You can see on their website. Yes, this will be posted later. Good to see you, brand name. Okay, would I be open to scheduling a one-on-one call? Let me get back to you on that. I'm down to, since you're a Victory Trades member. Yeah, you need Victory Trades Premium. I have some exciting news to give you guys in a bit of time. But for now, just hold off. Send me a DM, okay? Send me a DM. Good idea to exit Google call debit spread before earnings. Yeah, I was peeling off a lot of Google on Friday. I'm like, oh, great. Google held up pretty well, even considering the market's off. Look, Google sells off 0.76% while the market just gets crushed. If you want to see some of my Google positions, I've got this Google bullish weighted iron condor that's set to expire for max profit, but earnings can easily dampen that trade. But I think that might hit. So Google holding that iron condor through the earnings report like a savage. I got some July call debit spreads, buying the 200 call, buying the 205 call. But then my price target on Google for 2025 is 230. That might not hit if the market sells hard. 230 right now on Google is another 12% higher. I think it's possible it can get there. Google is my largest holding and still is. I even talked about that when Google is selling off down at 150. I like the breakout. I just don't like the market. So the stars sometimes need to align with some of the stocks. I like the slight rise in bullish volume on the breakout. As long as it's above 201.50, really above 200, Google's bullish. I would say it's best to take profits before the earnings report. That's the risk averse thing to do. The aggressive thing to do is to just hold it. I'd say if you've got a call debit spread like here on August, you can hold through the report. Because even if the stock tanks, you're likely going to have some of that premium left on Google. So shorter dated options, probably best to take off. Longer dated options, you pretty much have to hold through some earnings cycles to see those profits mature. That's what investors have to do. That's why I'm not a big fan when investors talk shit about traders. I'm like, what? You're just trading on a longer term time frame. It's not better or worse. Statistically, it is better. I think that's why. But when you're an investor, you have to hold through some earnings reports. Unless you're just going to keep flipping in and out of the stock. But sometimes those earnings reports are what contribute to the majority of the growth for the stock that year. So, that's the way I'd take it. Caution with the shorter dated options. The longer dated options I'm personally holding, that choice is up to you. Good stuff. Yep. And yeah, and then it comes down to risk to reward. If you're, let's say you bought a call debit spread for $200. And like you said right now, it's worth $410. Okay, you can really only make the remaining $90. Risk to reward says just take the freaking profit. Who cares if you could have made another $90? You'd feel like crap if you lost $410 because Google either had a bad earnings report or there's a bad reaction. So consider your risk to reward. That's why, like on Intel, INTC, I bought the 20 strike put ahead of the report, and I was already up $40 on the put. I'm like, I'm just gonna take this off. Why even gamble that put? And that was actually the good decision. Intel still dropped, but think about risk to reward going into the earnings. And here's another thing that, again, I'm not going to condone, but it's a little hack that's worked well for me. Take a trade in the direction that you think the earnings report is going to go. And if you're in profit before the report, take the profit. If you're down and you're willing to risk it, hold through the report, because it's either going to give you a profit or it's just going to be a loss anyways. Again, that's not advice or anything. I'm just saying you have multiple chances to profit if you take a position based off your setup before the report. You have a chance to profit before the report. And if you really want to, if you're down on it and you're willing to swing through it, there's a chance you could profit. There's also a chance you just lose it all. So just make sure you define your risk, know what you're risking, be comfortable with the risk. Whenever I go into an earnings report, I just like imagine that money is gone instantly. And so I'm pleasantly surprised if it's not gone and even more surprised if it profits. And that's a good mentality to have, even just in trading in general. Like before every trade, okay, what's my max loss? Where am I getting out? Where am I going to take profits? In what scenario am I taking profits? And that really actually takes away a lot of the stress from trading, because you've accepted it up front. You accepted it before you took the trade. Okay? Another question here, is AMC a dead stock? In my opinion, yes. This was manipulated, pump and dump scheme. Get a bunch of uneducated investors to throw away a lot of money. There's a time and place for a stock, and I'm not saying it can't pump again or you shouldn't invest in it, but you know, generally whenever it has a squeeze, that was the move. That was it. Hey, congrats. Don't try to like look for more. AMC has a lot of debt. Movie theaters are not in rotation for industries that are on the rise. Robotics are more on the rise than something like AMC. You know, the BOTZ ETF, BOTZ. This is an ETF that has a basket of robotic stocks. Right now, their earnings are really bad, but if you believe in it long-term and dollar cost average, maybe you can get a better return on something like BOTZ than AMC. Just my take though. I think you can get a better return on semiconductors, maybe not in the short term, but in the long term. There's just so many better things to invest in than a stock that's bankrupt and was a story a while ago. Okay? Any other questions, you guys? We're about 43 minutes in. This is another good live session. I'll have some more trade ideas tonight. I'll be live trading with you guys tomorrow. Be ready for anything, okay? Much respect to all you guys watching. If you're on YouTube, say what's up. Comment down below. What are you watching? What do you agree with? What do you disagree with? You know, I've been wrong before in the markets. I'll be wrong again. But can we be more right than wrong? And can we make more when we're right and lose less when we're wrong? Okay? We crushed it in January of 2025. We're going to crush it in February by having that same process. Okay? Analyze the stocks, accept the risk up front, set price alerts, monitor your entire portfolio, and it's tough to stop you if you do all those things. Take care, you guys. Peace.